Welcome, everyone. Welcome back to the Open Metaverse Podcast. My name is Luca. I'm your host, Luca, from the portfolio team. And today, I have a very special guest with me here at Token 2049 in Singapore. I have Eric, co-founder and head of network strategy. Welcome, Eric. How are you?
I'm doing great. Thanks for having me.
Amazing. Good to have you here. Very, very excited for this. I want to start with really giving our audience as well, you've probably done this a lot of times before, but share a bit more about yourself and what you do at Digital Asset. And then we can double click on a couple of those things.
Yeah, sure. So I'm Eric. I'm one of the co-founders at Digital Asset. Hard to believe, but I've been doing this more than a decade at this point. Been in crypto since 2009 ballpark. Was lucky enough to catch a very early Bitcoin bug, and I've been around the space in a lot of different functions and kind of different roles over the years, but decided to really build for it in 2014 when we started Digital Asset. And our path to where we are today is a winding one, but from a lot of very hard-learned lessons over the time.
And I mean, I did a lot of research around like your background back then, and I think you had quite the journey, right? From aspiring pilot in a way and aerospace engineer to Wall Street, basically natural gas trading, and now leading blockchain infrastructure at Digital Assets. Like, if you look back, what are some of the inflection points basically that pulled you toward crypto, and then eventually what you're doing right now?
Well, I mean, it's the old Mike Tyson quote, everyone has a plan until they get punched in the mouth sort of a thing, and just got to stay persistent and keep going. So I wouldn't say that hardly any step in the past 20 years is something that I planned out, but, more or less roll with the punches and do the best that you can in the given context. But, to the question as to what drew me to crypto, there's a real exuberance around people, effectively self-directing their own money. I think people have forgotten what it means to kind of explore and assimilate into different communities and put money at work and see what does and doesn't work and like be at the front line of figuring that out. And so there's a real element of just like self-sovereignty that I think really appealed to me. And, it was definitely in the gray zone of whether or not it was or wasn't a legal thing. And that's always just a little bit attractive if you're looking for edge in a trade. Just, hey, this has utility. It's unclear if it's really something that people can participate in. I'm comfortable participating there. So those types of things generally have nice payoffs, and Bitcoin's obviously been an exceptional one. I would say mostly just finding the inklings of things that are very interesting and trying to get as deep into them and understand them as well as I can to be supportive and help create outcomes, not just be along for the ride. So, in Bitcoin, I was a big miner for a while. I was trading and, providing liquidity before any large institutional trading firms did. We used to provide a lot of liquidity, like even there was a trading floor in New York that you could open outcry, like as if you were trading commodities type thing. Helped get Cumberland off the ground in 2013. So, and when we started Cumberland, part of the mandate was not just to market make, but it was also to invest in things in the space that would grow the ecosystem. So I think if you want to participate in the space, it's never enough to just kind of hitch your wagon to it and show up and put some in your pocket. But it's best if you actually dive in and get your hands dirty and find places to apply yourself. It'll also improve your conviction, as you get a little bit deeper and you understand it more. But also you're helping create the outcome that you're hoping to get from your speculation as well.
When you encountered Bitcoin for the first time during days at Wall Street with your colleagues, what did you personally see Bitcoin for at the first time when you saw it? Did you see it as just a wild speculation or like actual the incredible tech that lies behind it? At that time, it was very difficult to say. Obviously,
no, I mean, first off, the narrative was total bullshit at the time. It was, here's private money, and it's like, if anything, it's completely the opposite. And the earliest uses of it, after it was Satoshi Dice and alpaca socks, it was Silk Road. So it's like, okay, using completely transparent money to buy drugs on an illegal marketplace. But the narrative was obviously very different. So it was more just like having an internet native currency that couldn't be interfered with in any way, shape, or form. And obviously the black market's going to adopt that first. And that's, again, kind of what I was talking about before about the sort of asymmetric edge of being able to go into a space where others aren't willing yet. But yeah, I think it was just, again, this concept of utilizing a technology like the internet to create something totally different that we've never had before. And then the exuberance around, ooh, this could be so cool. This could be so cool. I mean, even then we would say like, could you imagine if this was worth as much as MoneyGram? So it was, even then, none of us were really thinking anywhere near as big as it is now.
I think at that time you were even giving out birthday cards with Bitcoin in it.
Oh,
right?
yeah. I used to give out birthday cards.
Tell us
with
about that
Bitcoins in it
story.
all the time. I mean, well, because, back then no one knew what it was. It was kind of like, you were the coolest guy at the party if you knew what it was. And nobody knew how to have wallets or anything. So, yeah, I mean, I would give people birthday cards with Bitcoin in it, or if someone wouldn't let me pay them back, I would open up a Gox account for them and put a bunch of Bitcoin in it or something like that. I mean, the irony is that, all those people lost it.
Yeah. Pretty much all of them, right?
No, I think it is to a T, every single one of them that I'm aware of. So, it's just, that's the joys of being very early sometimes. At least I didn't throw it away.
Yeah.
I didn't throw it away. I gave it to someone. That's a different feeling.
That's a good point. That's true. Nice. If we move on to Canton specifically, so maybe you just give a quick intro to a lot of the people what Canton actually does, and then also what are some of the fundamental principles behind the strategies, how to run and grow Canton, because obviously there have been quite a lot of big announcements over the last couple of months. Mm-hmm. So maybe you can dive a bit deeper there.
Yeah, I mean, before I do, I'll give you kind of the indirect, windy answer, which is, we started Canton roughly around the same time Ethereum. They were a little bit ahead of us. And I think that if you were going to really oversimplify Canton's vision and Ethereum's vision, they would be nearly identical. My, again, oversimplification is to be the new financial rails for the economy. The big difference between Ethereum and Canton is how we came to market, the first third of that 30-year journey. They started as a wide open ecosystem. Here's a preset system. Build things around what this is. And the amount of innovation and exploration and discovery and retail adoption has been incredible. They've done a really outstanding job there. I don't take anything away from them in that regard. We started inside out. We said, well, if the destination is we want the largest financial firms in the world, or at least their assets to be on this medium, we have to know for a fact that the technology can support what that requires. Mm-hmm. And those were some very hard learned lessons over the past 11 years of my life, of trying to navigate both, real requirements and what I would consider to be like completely misleading fake requirements. Sometimes a bank tells you they have to have something because that's what their IT team demands, but not because that's a legitimate reason or it might obviate the benefit of doing something. So navigating that was very tricky, but we're working our way inside out. Right? So we know the tech works at scale for financial institutions. We have trillions of dollars of RWAs, trillions of dollars a month in volume. There's no other chain on earth. None of the chains on earth combined even come close to those numbers, just like we're not even close to ETH in their retail adoption. So it's not A or B. It's just that we've come to market in different directions. And we're both at our own inflection points. They're trying to work harder to get inside, and we're starting to push our way outward. So we have the beginning of our DeFi ecosystem, some of our, like, what I kind of jokingly call Uniswap V1, Aave V1, like the things that ETH kind of did first and figured out for the rough first versions. That's all starting to come into Canton now. We have the benefit of seeing what has and hasn't worked for them. But with the opportunity to apply the really unique feature of privacy. So I don't know what happened over the past 10 years, but you go back to the chat rooms with Satoshi, it's pretty clear he understands the transparency is the bug, not the feature. Somewhere in 2014, it started to become that transparency was the feature. We've always seen it as the bug, and we woke up in a space today where we are the only blockchain on earth with privacy that works at scale. It's kind of hard to believe it when I say it, that we're the only one.
Especially because the whole space is so much
they talk about privacy. Yeah,
yeah,
like we were just saying before, the whole false narrative about Bitcoin being private money from the beginning. It's just, for some reason, it's like part of the ethos, but not actually part of the implementation of what anybody does. And there are a number of chains that are working really hard on anonymity, which is, I think, very different from privacy. So like I'm a big Zcash holder. It's an important part of my portfolio for me. And I think that's great in that context. But it's kind of this, generally speaking, this space can only think in two extremes. Everybody sees everything or nobody sees anything. And the reality is actually in the middle, right? If you're Circle, you have to see every USDC transfer. You just do. I don't see a world where, like, imagine Chase calls a regulator and says, hey, I just implemented this new really cool cryptographic technology. I can no longer see 30% of what's happening at the bank. But every transfer is the right amount. Don't worry about it. Like, that's obviously not going to pass into any zone where that scales, right? It's not that it can't work or anything. It just, that won't scale. It's just not the world we live in. It's just not the reality that we have, unfortunately. So it's not even solving the right problem. And, we've built this really interesting tech where Circle sees everything. You see your holdings. No one else sees anything. That's true if it's sitting there. It's true if it's transferred. It's true if it's composed in a transaction with something else. And that can get very complicated to manage. So, again, hard fought reality to learn and understand how to do all that stuff. But the benefit is we know it works at scale for the large institutions. We've seen the really fun experiments that have worked in retail. And as we push out into retail, we get to apply this feature that nobody else has. So it's been a lot of fun the past 18 months.
So basically, you always had that stance from day one, like that always. Other direction that you were taking versus.
No, it's always been. There's been this big misconception and an attempt to put Canton and digital asset in this private blockchain space forever. I mean, listen, to be really candid, it was convenient to not fight it, right? Because there were large periods of time where, that was the trend, or regulation in the U.S. was really dangerous to say you were doing anything other than it. But ever since we've been building Canton, it's always been about global interoperability of all these things. And when we started digital asset, I was a big Bitcoiner. You think I'm going to go into private blockchain space? Like, it's never, ever, ever been part of our ethos or our mandate or our goal. Our goal has always been an open ecosystem and all the network effects that come with it. It's just totally different path to market than anyone else.
How does the privacy feature work for, like, in layman terms, for audiences like?
Yeah, it's actually really simple. So what's the safest way to protect data?
It's encrypted.
Okay, you fell right in my trap. Thank you very much. Lock your phone, give it to me for this week.
Okay, yeah.
You comfortable with that?
No.
Yeah, okay, why not?
Yeah, because I don't have custody of it anymore.
So the simplest way to protect data is just not give it to someone that shouldn't have it in the first place, right? And the way that all the public chains that you're used to today is that they replicate every piece of data to everyone, and that's very important for stuff like Bitcoin. Not great if you're talking about something like a bank app. So the way Canton works is you just design into your asset who are the right parties to see, store, validate, touch, inspect, audit. You have all those configurations into your smart contract. That is not at an app level. That's all the way down to a UTXO level. So I could have a $10 bill in my pocket from Chase and a $10 bill in my pocket from Bank of America, and I can send you $20 and you can get one from each. And Bank of America knows about 10, Chase knows about 10, you know about 20, I know about 20, right? So we can do all these really interesting compositions. Or we can have completely public goods like a Canton coin composed with completely private things like US treasuries. And everybody sees the coin transfer, nobody sees the treasury transfer. So there's just it's just data segregation is really what it comes down to. And then at a very granular level, being able to configure exactly which nodes on Earth can see, store, touch that data in any way, shape, or form.
How would you distinguish that or differentiate that with anonymity, which you were mentioning before?
Yeah, so when Circle issues USDC on Canton, they are guaranteed in real time to receive, the same way that they do on Ethereum, a stream of every smart contract update that has to do with USDC. So it's not like something is disclosing that data to you after the fact that could break, or if you want to audit something, you can get some proof that what took place was true. They are, just like Chase looks at everything that happens at chase.com, they see, for them, USDC on Canton looks like it's on ETH. It looks exactly the same to them. And they can provision their AML providers like Elliptic and TRM, who are also on Canton, to get a live, from the protocol, cryptographic view of the exact same data. So for them, USDC on Canton looks exactly the same. So it's just kind of getting that asymmetry right and knowing that they're going to need that. And then there's not a lot of rocket surgery in this. You just kind of have to know the right requirements and work through it.
I guess in terms of regulation, because that's obviously a huge one for you especially, how much adoption did you see in the first couple of years versus the last 2-3 years, for example? What was the pace of that progress?
So you're asking specifically like around our institutional adoption?
Yeah.
For us, it's been a steady burn for the past decade. There's been no real material difference in adoption across regulatory regimes. Because a longstanding ethos about Canton is that you should not have to have any regulatory change to be able to use the chain. And it has been a strict requirement in most of the other ecosystems. You no longer run your program. You just have some pool of pseudonymous validators that are deciding whether or not you said go left is going to actually happen. That's a weird paradigm to stand in front of a regulator and ask for. So again, like this configurability to say, hey, those are my validators. They see this information. Finality happens when this happens. To be crystal clear about that, for it to be deterministic. Again, it's been a hallmark feature of Canton. So it's been completely straightforward and easy for us to be in production no matter what the regulatory regime was at the time with institutional adoption. And that's just the normal growth rate of working with large institutions. So it's just been constant slow
Just
burn.
a very long sales cycle, right?
Very long, constant burn, yes. But in the past, year, the adoption of Canton, now that we're bringing in the much more nimble challenger ecosystem, the two guys and a dog sort of startup, I mean, the adoption rates are exploding, which is fantastic. And it's also helping accelerate the institutional adoption as well.
I mean, for most chains, ecosystem growth really often comes from hype, incentives, especially when it comes to tokenomics designs, or speculation at the end of the day. But Canton, as you already pointed out, has gone really another route of like real assets, trillion in tokenized value, as you said, institutional adoption. What would you say are some lessons for other ecosystems, like even outside of finance, that they could learn from Canton's approach?
Well, I mean, we do have a very unique tokenomics regime, which is fueling a lot of the new
Tell us a
growth.
bit more about that, yeah.
I mean, this is one of the benefits of, when I sat down and came up with the first draft of the tokenomics, is a real benefit of having a decade plus of prior art in front of me. And this is kind of a spicy take, but from what I'm not an engineer by trade, but looking at what I see really high quality engineers say about the tech in crypto, it's very bad. And even just conceptually speaking, to call yourself a network, but you're one database, feels like that would probably fail Comp Sci 101. So generally speaking, I don't think that the tech is the compelling part of crypto. But the economic incentives and how that's coupled with tech, and how in particular it's coupled with solving like network cold start problems, I think is incredibly clever. And it is where I think we've seen a lot more differentiation than we have in the tech, actually. Like you look at most things downstream of ETH have innovated on the consensus algorithm, but otherwise have adopted very, very similar technology structures. So we've seen more differentiation in the tokenomics. So anyway, it's more a tip of the cap to thanks to everybody for their experimentation. Another sort of relative first is that I didn't see many, if any, ecosystems that rewarded the applications in the network. And I can understand how this happened because ETH was supposed to be Bitcoin with smart contracts, and then they structured their whole tokenomics around replicating Bitcoin, but with more expressiveness in smart contracts. But then where they found product market fit was more as an application blockchain. But their tokenomics don't incentivize that. And I think that it's a bit of a travesty that we have coins for all of these apps that are on the chain. I'm not going to call out any by name, but I think they're all more or less ridiculous because they are, I understand why they did it though. I actually empathize with them because they're creating so much value for ETH holders, but then they're not getting paid by the ETH protocol to do it. And spare me with the grant bullshit. That's like a one-time small thing. It's not a real thing. I'm saying that it's not a consistent part of your revenue stream that you would be getting paid from the network for doing what you were doing. And that seems like a major oversight to me. And in Canton, we wanted to make sure that at least 50% of all the rewards that would ever exist go to the people that are creating the value in the ecosystem. So app rewards are a very serious thing. I think the simplest way to really think about this is imagine if you received a percentage of the network fees, if you are someone that's causing activity in the network for the transactions you created. So imagine if every time USDC moved on ETH, 50 to 85% of the network fees spent to make that transfer went to Circle, more or less in real time. That is effectively how Canton works. Right now, the economics are even better because it's early and it has, steep curve, blah, blah, blah. But it's a sustainable at maturity structure, which works more or less like the way that I just described. So app rewards are a very important part of our ecosystem. And our early adopters that are building in the space and really driving volumes in the mainnet are experimenting with whole new ways to participate in that pool, plug it into how they make money, rethinking their business models, rethinking their capital formation structures. So there's a really tight hotbed of experimentation in Canton around this tokenomics, because it's the first time, again, that I'm sure there is an example or two here or there that are similar, but it's the first time I've seen at the scale that it's operating, that this is happening, and for it to be just so automatic in the network.
And also to double click on that, correct me if I'm wrong, but I think there's no pre-mined tokens, no VC allocations. All the value goes to the people who actually provide value.
Yeah, that's right. System, right. That's right. Yeah, again, a lot of people talk about building decentralized networks, and then they don't actually stand by it or mean it. And, rather than kind of toot our horn about how we did it, the results, I think, speak for themselves. Launched during Gensler. Digital Assets headquarters are in New York. I've not lost a single night of sleep over this. We have publicly traded financial companies that have never touched crypto before that were launch miners in the ecosystem. There are people that participate in the coin, entities that participate with the coin that have never touched crypto before, and that's just like, yeah, this makes perfect sense. Actually, this is totally appropriate. We can participate, not just hold, but be active in this ecosystem. And it meant no pre-mine, no pre-sale, no ICO, no sale to the public, launching fully decentralized, so there are no centralized components. The foundation is actually governed by the community. The foundation doesn't control the network. It's one of many votes. There's so many different layers of decentralization built into its governance, and launched from zero. And all the coins that you see in distribution today have been earned by someone that did something useful in the network. There's been a healthy enough over-the-counter secondary market at this point that that's not entirely true. There has been people purchasing at this point. But generally speaking, the bulk of what you see out there are entities that have earned it by doing something useful.
Very different approach.
Yeah. I mean, there's a lot of different approaches that we took, but that I think it's a pattern of a lot of consistent decision-making of what is the problem, what is the result you're trying to get, design a system that you think will get that. We're early in that journey, so I'm not going to claim victory. We'll see. We'll see what happens, of course, and we'll, as a community, adjust, I'm sure. But the early signs are very promising.
You think with this setup and all the way that you've encountered or went through so far, is there any risk of being too institutional? Maybe missing that, because you've been a Bitcoin OG, I guess, in a way. Yeah. So like that grassroots community feeling to it, that whole element, is there a risk of losing that?
Yeah, I mean, of course. I'm really excited about balancing the scale with our earliest, adopters right now. We have retail wallets going live that, forcing all sorts of fun changes, because things were very institutional. So I'll give you a silly example, but something that I think is not great in most networks is that you can just dust anyone. You can push whatever you want into any account that's on chain. And on Canton, the default is that you have to accept any incoming transfer.
Okay.
Sounds nice on paper. Then you face the reality of integrating with the wealth of existing wallets that have never seen that feature before. And they're like, I don't even have a space in my UX to put this. And, facing that reality, then you figure out, well, how do we kind of not undo the feature, but not make it the default or make it easier to just push stuff. So yeah, there's a lot of institutional stuff in the ecosystem that is going to get polished into a more retail experience, if you will. But yeah, it's working through all those things.
I mean, there's actually quite a cool feature. I remember back in the day through the whole NFT meta, when people were just sending you stuff, and at the end of the day, it was a scam in a way that you just try to click it or you try to sell it, for example, right? And that basically run a smart contract which drains your wallet. So actually, that's a very nice feature that you mentioned here.
Yes, but solving that problem means that you push more infrastructure to the user, right? So in all these things, I don't think there's good or bad. There's just trade-offs, right? So I think that what has worked extremely well in these other ecosystems is that generally all the work is pushed into the validator pool. And client side, you're just kind of blindly signing stuff and have really clean UX. And there are a bunch of hidden risks in that. I think it's probably been the right trade-off for those ecosystems to do that. I'm not sure that that's the long-term approach, though.
I mean, I guess at the end of the day, crypto should come to the stage where it just doesn't feel like crypto anymore, right? You don't need to know it's crypto for using it. Is that the future that you envision for most of the applications?
I mean, I think that's happened already. People always talk about this, but how many users does Binance have? It's like 300 million users, ballpark. How many users does Coinbase have? Somewhere in that vicinity. Compare that to, the wildly successful hardware wallet of Ledger, and you're hundreds of millions of people apart. And the Ledger experience is incredible. It's a very good product, but the intermediated product, where it's just a website, is, without any extra button clicks or anything. And I think Ledger is the by far safer experience, right? But I'm just saying that it's already fully intermediated for hundreds of millions of users. And I don't know that we need to keep saying that when that happens, then we're going to get our next wave. I mean, that happened a long time.
Do you feel like we can go further down that path of like more applications that people are going to use? Or you think it stops at the exchange level? Like people buy crypto, people sell crypto, that's it.
The exchanges are morphing a lot. I mean, they're becoming more like your bank, more like your interface into investments. You look at the tokenized stock space, the X stock stuff. They're trying to be, one wallet to rule them all. All the lending capabilities that you don't get in your normal brokerage account today, where you can just click a button and take leverage against your position as cash and go rehypothecate it. Those things are taking over the traditional, bank and broker dealer experience, I think.
Yeah, that's a good point. I want to double click on the consumer dApps that Canton is also working on. Like, what are some of the things that you're really excited about there? Like the most exciting projects or things that...
Yeah, the most exciting project that I'm looking forward to are dark pools. You think about the evolution of on-chain DEXs. You had basically just settlements for a little while. Then you had AMMs, CLOBs. Solana's done a great job with CLOBs. And then obviously people like Hype have taken that even further. But the downside in all that is you see every trade, everyone's position, where their leverage is from. And when you're talking about trading perps on something not as deep as Bitcoin, you can really push people through their stops, and you can really manipulate the market in all sorts of inappropriate ways. And it really should not be public information, a lot of that stuff. So I'm just excited about continuing to push the next evolution of the things that have been going so far. And what does it mean to add privacy? And we get to reinvent finance all over again. And here comes real dark pools next. So stuff like that are really great. And even really simplistic stuff. There's a lot going on in the Bitcoin world. And a lot of that's being done very transparently or through qualified custodians as a tri-party agent. And there is a lot of demand for people to use Bitcoin on-chain in both retail and institutional contexts, like in more DEX and DeFi, but they want to do it at a scale that they would not be willing to do transparently on other chains. So even really basic stuff like Bitcoin lending with privacy, I think is very cool. Imagine you're in your Ledger device. They secure 20% of the world's Bitcoin. You're in your Ledger device. You can rotate that into a private wrapper on Canton, lend it, have yield on top of it, and no one knows.
Yeah.
I mean, other than the protocols you're interacting with. Again, it's not anonymous, but the world at large doesn't know. And you're not looking over your shoulder when you're walking around the street, sort of a thing like it's happening to a few large Bitcoiners these days.
Yeah.
So I think just being able to continue that vision of add this layer of privacy. It's not perfect. I know everyone would prefer it's on Bitcoin proper, but it's a step in the right direction.
In terms of like all the other protocols that are trying to do something similar when it comes to all the things that Canton is doing, what would you say are like the biggest differentiators? Is it really the level of privacy or the simplicity when it comes to the privacy layer and like working with all of these big institutional layers already? Because once you've achieved that, it's very like it's kind of like a self-fulfilling prophecy in a way, right?
So I think the easiest differentiation of Canton to explain to people is privacy, but I think the most durable one will be that, again, it's the only network I'm aware of that has unlimited horizontal scalability and composability. Right? So like we've seen Dot and Cosmos and Avalanche and people push subnets in the past. We've seen a proliferation of L2s around the ETH ecosystem. But the big difference between Canton and those ecosystems is that it's not another network. It's not an L2. It's not a subnet. It's really like an app on the internet. So ETH sheds its network effects in two ways. One is in the token that we discussed before. So if people want to speculate on DeFi, they'll buy Aave or Uniswap instead of buying ETH sometimes. That's because the tokenomics aren't aligned. We discussed that before. But the more immediate one is the moment you hit a certain throughput, layer, you have to leave. You got to go somewhere else. And so they're physically shedding network effects. We won't have that problem in Canton. So once we win someone, if they 10x their volume and they need to change the way that their infrastructure works, they can do that in Canton without leaving Canton. And I think that'll be the most durable long-term advantage of the ecosystem. And privacy is just like the obvious sexy thing to start with right now.
I'm just curious to double click on one of the things you said before in terms of the user numbers of, let's say, a centralized exchange like Binance or OKX or whatever it is, versus people who actually use a ledger or a Trezor. Do you feel like privacy for a lot of these people will eventually become more interesting in self-custody, or do you feel like we're across that point that convenience is king? It doesn't really matter, actually.
I think convenience is the overwhelming driver, but what has happened in the past 2 years is that the asset class is getting so big is that people are becoming institutions themselves. And then they start thinking a little bit more like institutions. So if you're just talking about, 2013 Cumberland days, the amount of money at risk there wasn't enough necessarily to force a behavioral change. But now it's very different. Now you're talking about people moving billions of dollars a day in meaningful ways and leaking trade information, and that trade information is generating tens of millions of dollars of revenue for them. So the numbers matter a lot more now, and that's forcing the next level of sophistication.
Aside of like everything that you're doing with Canton, like what are some of the developments in the space that you think is super interesting to look at that generally excites you? Like, is it DEX volume and hyperliquid, or is it something completely different? Or like, what are some of the areas maybe beyond the institutionalization that are genuinely exciting for you?
Yeah, I mean, this is not a very popular take, but I like the permissionless securities stuff that's going on. You don't have to go that long back to look at what stablecoins were, and they were as taboo for a while, and then they just got blessed into law with the Genius Act. If you have a stablecoin version of Apple stock, and you can successfully argue that representative claim is permissionless, I don't think it's really so much about access. I think it's about structuring that becomes a lot more interesting. So I've always had this love-hate relationship with like Betterment and Wealthfront. Do you know what they are? They're like robo-advisors. Because I think it's such a nice idea. It's a great idea. Like an algorithm that makes sure I have my cheapest exposure to upside of the stock market and like optimizes little mini tax flows for me.
Especially in this day and age, right? It makes
so
much sense.
But I hate the fact that they are hundreds of people large and they're banks and they're licensed and they're this and they're that. And to use the product, I got to take money out of my broker dealer, out of my bank and go put it with them. I just want a 3-person designed algorithm on top of my account directing things. And I think that if you have these permissionless claims, provided that they're created well, they're very liquid, the backend's very safe, you can go in and out. If you create a good representation of it, you could open up a very interesting structuring space. Right now, prediction markets are very popular. I'm old enough to remember the last 4 times that was true. And, my personal opinion about why they tend to die out instead of persist is that you can be right, but you get capped.
What do you mean exactly on that?
Oh, well, I thought Trump was going to win. Someone told me this story the other day. I'm telling someone else's story. Like the, odds were 35% he was going to win. He won. I got capped at 1. I paid 35 for something. It settled 100. This stock tripled. This did this. This fixed income product did this. And so, like, if you're an event trader and you are trading binaries, you're actually capped. Whereas if you were to ask an algo, hey, I think the Fed's going to surprise cut 50 bips tomorrow. What's the best portfolio I could put on to take that position? I think that sort of experience can become very compelling, very interesting. And I think that a permissionless representative of the asset would be a better vehicle for that than the actual asset. So I think that it's not real assets or these permissionless vehicles. Too often, just like everything else in the space, people say A or B. I think it's A and B. But I think that permissionless wrapper claim on securities is an interesting space, and it's definitely a hot topic right now.
If there's anything about the space that you could change in terms of behavior, in terms of like how people think about this, is there something specific?
I do have a very specific one.
Tell me about it.
I'm going to swear too, because it really boils my blood. I am so fucking sick and tired of the fake ass fucking words that everybody uses for things that have existed in finance for decades. Stop inventing new words for things that already exist. Because the problem is...
Like all the fire words, basically.
Oh, no. Like yield farming. You're short vol. Stop it. Yeah. Stop with this shit. Yeah. And the problem is, the reason that this is a real problem, everyone pretends that they care about adoption. But then, I have people that work with us that have been in capital markets for 30 years, and they'll look at me and go, I have no idea what's going on here. I'm like, you ran the securities lending desk. You know exactly what's going on with looping. It's leverage on the asset. Like you ran this desk for a decade. Yeah. Oh yeah, that's what it. Yeah, they call it looping for some stupid fucking reason. Like that stuff actually creates a moat where you do have a large audience of people that are incredibly knowledgeable about capital markets. These words already exist. Use them. Don't invent new ones, please. That's my soapbox.
That's an interesting one. Yeah, but that's a good point. That's a very good point.
Drives me nuts.
For a long time, I guess, already.
It makes it very hard for people to understand what's going on, and there's no reason to. My cynical take on this is that when this really got invented, like yield farming, is because they're trying to hide the real risks to people. And so if you make it sound like it's free money, that helps you. So it's very much a marketing thing. So I understand that. But I think that is short-term smart, long-term foolish, and it's not doing anybody any favors.
I guess it's really aligned with like all the hype and speculation in our space to just remarket something to make it sound sexy, right?
Fine, but I mean,
I agree. But
if you're looping something more than once, then looping isn't going to save the fact that you've just created a ton of risk for everybody. So whether you call it leverage or looping, anyway. I'm not going to belabor that.
No, but that's a very good point, actually, that you're bringing up. Yeah, I think I guess a big part also is like to confuse a lot of the retail investors who think it's something new and sexy, but they're actually not aware of the risk, as you put it now.
Yeah. Or it's just good marketing.
Yeah.
One or the other, I don't know.
But that's a good point. That's an interesting one. I guess also, as we're moving closer towards the end of the interview already, what are the top 3 things that, would you say, that's a long one, but contributed to your success and your career through all the things that you've done over the past 20, 30 years? And was there something that you know now that you would have known 10 years before where you said, okay, this would have changed my life completely to a different direction?
I don't know. I didn't expect to be so introspective here.
Like if you could talk to the 20-year-old Eric.
The 20-year-old Eric, no, I see, that I don't really agree with. So the dumbest person I've ever worked with in my entire life said the smartest thing I've ever heard, which is... He said hindsight's 50-50. He thought that's what the expression was. he said it seriously, like, I should have known better. Hindsight's 50-50 type thing.
Yeah.
And, the genius in it from my perspective is that it's very easy to think, if I would have gone left instead of right that day, I would have found the money or whatever, but maybe you get hit by a bus. You don't know. You just always assume the positive outcome
without all the other
things that could have happened on the path. So I'm not much of a person to ever look backwards and be like, I should have done this instead of that. And I've generally just looked forward. And so to your first question, like what's the success? The success that I've had generally comes from persistence. And I think that's...
And being curious, I guess, as well, too.
Yeah, of course. But, a lot of people are curious, but then kind of give up on something. I think persistence is probably the most important human capability, is just to kind of just keep fighting through something until you find the outcome, or it comes to, an outcome that it's over. But not giving up on something is very important, because it's similar to the other one, like hindsight's 50-50. I think I'm a really big believer in the work reveals itself sort of mantra. It's not my line, of course, but, you get into a problem and then you see, well, actually the real problem is here, not there. I thought it was going to be here, or maybe the real innovation's over here. And you don't really know until you get into it. And, you can have a thesis, but if you don't go in good faith and work through it and stay on top of it and stay persistent, then it's easy to miss what might have been a huge opportunity. So you have to weigh that against opportunity cost and your time, and making sure you're not wasting your time on stuff that has no possibility. That's the flip side of persistence, is being stubborn. But yeah, I think in general, persistence is a good one. And don't second guess.
Don't second guess?
No. That one I knew in college. I had 2 rules in college: never study for a test, never change an answer. So that one I've carried with me for a long time.
Let's go through the lightning round then.
Okay.
Just to wrap up the episode. It's going to be a very quick one.
Mm-hmm.
Not sure how much you can talk about this, but Eric, what's the last cryptocurrency that you bought?
Other than Canton Coin? Because we did do a fair launch. I don't have any. I have to buy them on the market, just like everybody else. Yeah, I told you earlier in the interview, Zcash. I'm a really big Zcash believer.
Again, like doubles down on being in a Bitcoin OG and like being one of the early ones.
I mean,
part of
community
that
governance is fantastic. Yeah. They've really been very thoughtful about how they structure the sustainability of the development. It's the one application for zero knowledge that makes sense to me, is anonymity on a native cryptocurrency, not on an RWA or a stable coin. So yeah, totally. I'm a big Zcash fan.
Next question then. Your house is burning down, or your apartment in New York. What is it, one thing that you save? Your ledger?
Well, I was going to say wife and kids, but that's 2 things. So I guess I have to choose between them. Yeah.
Okay, let's take that away. Outside of that.
Outside of that, oh man, it would be impossible to save. But I have this really rare tree.
This really rare tree? Okay, tell us about that.
I don't know. I like to garden.
Like a bonsai tree, or like?
It's not bonsai, but I do grow big trees in small pots. So it's kind of like bonsai, because I do have to prune them and stuff like that. But it's not the art of bonsai. It's just
cool
living in New York sort of a thing. So I have a very rare maple. Goes through like 6 or 7 different colors. I've never been able to find it again. I used to have 3. I'm down to 1. So
did you grow it by yourself, or you just bought it?
Well, I bought it was very small, but yeah, I've been growing it for a while.
Oh. Okay.
Yeah, so probably that. Everything else is money,
Yeah, that's a good point. But that's a very cool answer, though.
Yeah.
Cool. What is the last thing that you've Googled on your phone?
Googled on my phone? I was trying to get a lot smarter about bonding curves the other day. So I was diving into the world of what's been done there in prior art.
You have a specific venue where you go to when it comes to learning about crypto, or is it just like Googling, podcasts, YouTube videos? Like the general stuff.
It's hard to cut through the noise in the crypto space.
Yeah.
I try to look at the things that are active, that are being used. Because I feel like actions speak louder than words. So I try to dive into the things that are actually not just hype, but been around for a while and have been successful because of design decisions that they made.
Makes sense. What's the last video game that you played?
Video game?
If
no,
over the last, I don't know, 10 years or so.
There was a 3-month period of time where I downloaded one of those really stupid like Twitter games where you like have to pay for everything.
Yeah.
because I just wanted to see how they're structured. I wanted to like
The
understand
user flow, like,
yeah, like what about it is addictive, where, like how, and like my big takeaway was just that it's the sort of daily repetition. You know,
the coming back.
yeah. If you can kind
Stickiness.
of teach that, then that's a trick. And then also a lot of sunk cost fallacy stuff. Like I pay this money. Oh, it's just a little bit more to do the next one. You know, that's all interesting sort of psychology. So I experimented on myself.
Makes sense.
Yeah.
And then maybe one last one to wrap it up. If you have a role model, who is it?
All my role models have been canceled for reasons that have nothing to do with why I liked them. So
Let me guess, Russ Ulbricht?
No, he wasn't a role model. I really like Karl Lagerfeld. My reason is I think the best artists are prolific because it's easy to edit. It's very hard to create. And people that just create. And then like, okay, 100 of these suck, but that one was good. And then they go and edit that. And they don't get emotionally attached to it. It's just the constant process of creation. Like my understanding was it was hard to even do a museum because he just throws stuff out. Thing walks the runway. He's like, yeah, that worked. Throw it out. You know, so this sort of like very stateless, creative sort of experience and being. I love that. I think that's the way art should be. I don't know. It reminds me a lot of like the practical arts, chef and things like that, where you're just constantly all the time doing something. I think that's when you find those little nuggets. It's very rare someone just, you know, one hit wonder and that's the only thing they ever did. It happens, but for us mortals, you know, you just got to constantly do
persistence.
Yeah, persistence. I guess that's right. Yeah.
Is there anything else that you want to share about Canton, or anything that is upcoming, anything exciting that you're building, or anything else that comes to mind?
No, just, well, okay. One thing that I'd like to add, which is I am really buoyed by how much fun it is to have all these people kind of get into Canton for the first time. So for anyone that is doing that, for anyone who's building on Canton for the first time, just reach out. It's a lot of fun for us too. It's a lot of work. You're not bothering us. It's fantastic to hear your stories. Even better to hear what sucks. Please tell us. You know, the community is really good at trying to fix stuff that they can and working through problems. I think we're quite responsive and we do a good job of that.
Is there a specific venue where people can go? Is it a Telegram group? Is
too many to
DMing you
count.
directly on X, or what's the best way?
Whatever the path is that you have to someone in the Canton ecosystem. Doesn't have to be me, doesn't have to be DA. There are a lot of companies building in the space, a lot of the people contributing. So there are a lot of different avenues that people can get in touch. But in general, I would say that don't be shy about it. Reach out, say something. We like to put as much weight behind the people that come to the ecosystem as we can. It's not enough for someone to show up. We try to do whatever we can to activate, because I consider that like a really big leap of faith from them to come in. So I always try to repay that favor. And our community is really, really great about that. So thank you to everyone who is. It's a lot of fun. You're bringing a lot of energy into a very tired dog. So thank you for that. And looking forward to the next decade.
Amazing. Thank you so much, Eric. Thanks so much for being on the pod.